Do you want to be successful in investing? You're in the right place. In today's video, we will be sharing 10 simple rules that can guide you to investing success. These rules are not complex, they're not exclusive, they are simple and applicable to everyone. Whether you're just beginning your investing journey or you've been in the game for decades, these rules can offer you a fresh perspective. So, grab your notebooks and get ready to dive in. Stay tuned as we uncover the first rule of investing success. Our first rule is simple: start early. Now, why start early, you may ask? Well, the answer lies in the magic of compound interest. This is the process where the interest you earn on your investments begins to earn interest on itself. It's like a snowball rolling down a hill, gathering more snow and growing larger as it goes along. The longer the hill, or in our case, the more time you have, the bigger the snowball gets. Starting early allows your investments to grow and multiply over time. Think of it as planting a tree. The sooner you plant the seed, the more time it has to grow and the larger it will be. The beauty of starting early is that even small amounts can grow into substantial sums over time. So don't be discouraged if you can only invest a little at first. It's about building a habit, not becoming a millionaire overnight. Remember, time is an investor's best friend. Rule number 2, diversify. Picture this: you're at a buffet. There's a vast array of delicious dishes, each with its unique taste and nutritional value. Would you fill your plate only with spaghetti? Probably not. You'd likely sample a bit of everything. Investing is much like this buffet scenario. Diversification is about spreading your investments across different asset classes like stocks, bonds, and real estate to balance risk and reward. Think of it as a safety net. If one investment doesn't do well, others might perform better, cushioning the blow. It's akin to not putting all your hopes on the spaghetti, but also trying the roast, the salad, and maybe even the sushi. This way, even if the spaghetti turns out to be disappointing, the rest of your meal can still be satisfying. The principle is simple: don't put all your eggs in one basket. Moving on to rule number 3, invest consistently. The beautiful thing about investing is that it's not about how much you invest at once, but rather how consistently you do so. This brings us to the concept of dollar-cost averaging. It's a simple yet powerful strategy where you invest a fixed amount of money at regular intervals regardless of the price of the investment. This way, you buy more shares when prices are low and fewer when prices are high, reducing the overall impact of market volatility. Now, why is consistency so important, you ask? Well, it's because investing is a long-term game. It's not about getting rich quick, but about gradually building wealth over time. Making regular investments, no matter how small, can add up to significant amounts over the years. It's like watering a plant. It won't grow overnight, but with consistent care, it will flourish. Remember, dear friends, consistency, not timing, is the key. Rule number 4, understand your investments. Imagine sailing a ship without knowing the intricacies of the sea or the vessel itself. You'd be lost in no time, wouldn't you? The same goes for investing. It's crucial to comprehend the companies or assets you're putting your money into. Are you investing in a tech startup? Then understand the technology they're developing, their business model, and the market they're targeting. Are you buying shares of a pharmaceutical company? Understand the drugs they're producing, their research and development process, and their financial health. Investing in something you don't understand is like buying a lottery ticket. You're merely hoping for the best without any solid foundation. The dangers are immense, from losing your investment to missing out on better opportunities. Remember, knowledge is power, especially when it comes to investing. Never invest in a business you cannot understand. Here's rule number 5, be patient. Investing isn't about instant gratification. It's a marathon, not a sprint. It's about planting seeds and waiting for them to bear fruit. Like a fine wine, a solid investment needs time to mature, to reach its full potential. You see, markets can be volatile in the short term, with prices fluctuating daily. But over the long term, these fluctuations smooth out, and the general trend is upward. That's why patience is key. Investing is not a get-rich-quick scheme. It's about building wealth steadily over time. It's about understanding that Rome wasn't built in a day, and neither will your investment portfolio. It's about sticking to your plan, even when the market is down, knowing that in the long run your patience will be rewarded. So remember, when it comes to investing, haste makes waste. But patience is a profitable virtue. Rule number 6, stay informed. In the world of investing, information is your greatest ally. The market is a dynamic, ever-changing landscape, and as such, it demands constant vigilance. The most successful investors are those who keep their finger on the pulse of the market, absorbing news, trends, and insights like a sponge. Staying informed is not just about watching the numbers rise and fall, it's about understanding the why behind those movements. It's about recognizing patterns, anticipating shifts, understanding the impact of global events on your investments. It's about continuous learning, self-education, and curiosity. Remember, every piece of information you gather is another tool in your investment toolbox. It helps you make informed decisions, mitigates risks, and optimizes your returns. So keep reading, keep learning, keep questioning, because in the world of investing, the only constant is change. And the best way to navigate change is to stay informed. Knowledge is power in investing. Rule number 7, ignore the noise. Picture the market as a bustling, cacophonous bazaar. There's an incessant hum of voices, each clamoring for your attention, insisting that their advice is the golden ticket to wealth. Now imagine yourself calmly walking through this bazaar, focused on your own path. This is how successful investors navigate the financial markets. They tune out the noise. You see, the market is full of rumors, speculations, and panic that can easily sway your decisions. One day, it's a hot new stock that everyone's buying. The next, it's a market crash that's got everyone selling. But remember, these are often just distractions. They can veer you off your investment goals and lead you into making hasty, ill-informed decisions. Your strategy should be based on solid research, clear goals, and a well-thought-out plan. Don't let the daily market chatter divert you from your path. Stick to your plan, ignore the market noise. Rule number 8, review regularly. The world of investments is akin to a vast, ever-changing ocean. The currents, the tides, they all shift with time. Just as a sailor adjusts his course based on the conditions of the sea, so too must an investor adapt to the changing landscapes of the market. Regularly reviewing your portfolio is not merely about watching the numbers rise and fall, it's about understanding why they're moving and how those movements align with your investment goals. Maybe you'll find that a certain asset isn't performing as expected, or perhaps a new opportunity has presented itself and you need to rebalance your portfolio. Remember, investing isn't a set-it-and-forget-it endeavor. It requires active engagement. It demands that you stay informed, be patient, and adjust your sails when necessary. And that, dear friends, is why regular reviews are so crucial. They keep your journey on course and ensure that you're constantly moving towards your financial goals. Regular reviews can keep your investments on track. Rule number 9, learn from mistakes. Just as in life, the path of investing is not always smooth. In fact, it's rather bumpy, and along the way you're bound to stumble. Yes, you will make mistakes. No investor, no matter how seasoned or savvy, is immune to them. But here's the thing, mistakes are not the end of the world. Quite the contrary. They're opportunities, valuable lessons dressed in the guise of failure. When you make a mistake in investing, don't let it discourage you. Instead, take a step back, analyze what went wrong, and use it as a learning experience. Ask yourself, what can I do differently next time? Remember, every error is a chance to refine your strategy, to become a better investor. So embrace your mistakes. They're not setbacks, but stepping stones. They're not failures, but fuel for your future success. And always remember, mistakes are the stepping stones to wisdom in investing. And finally, rule number 10, stay disciplined. Discipline is the cornerstone of successful investing. It is the difference between a carefully calculated strategy and a whimsical gamble. It is the ability to stick to your investment plan, especially when the winds of the market are howling in your face and the seas of uncertainty are rocking your boat. Investing is not a sprint, it's a marathon. It's about the long haul, and discipline is what keeps you on track when the finish line seems distant or obscured. You might be tempted to deviate from your plan, to chase a quick profit or avoid a sudden loss. But remember, discipline means staying the course, even when it's tough. Discipline is about making decisions based on research, analysis, and strategy, not on fear, greed, or the latest market rumors. It's about understanding that success in investing doesn't come from making the right move at the right time, but from making the right moves consistently over time. Discipline is the bridge between goals and accomplishment in investing. So there you have it, the 10 simple rules for investing success. From starting early to staying disciplined, each rule is a brick in the sturdy wall of financial prosperity. Diversification, consistent investment, understanding your portfolio, patience, staying informed, ignoring the noise, regular review, and learning from mistakes are all crucial ingredients in the recipe of success. Remember, success in investing doesn't happen overnight. It takes time, patience, and adherence to these simple yet powerful rules. Happy investing!